Check, please.
Welcome to Everything Money. It's Seth Palmo. In this video, we will explain to you the process of finding stocks before they break out. We will show you our software and how to analyze companies using financial statements and have that translate into a stock price. But surprise, we got you. We will give you a contrarian approach about how to find stocks that break out. And the gist is, Paul, there is no way to do this. Would you agree? What is your process on finding baggers, 10 baggers, baby?
No, there is a way to do it. Guys, there are multiple ways in which you can look at stocks. We are value investors, we're chart readers, and we're also something called momentum traders, which we're getting into right now. Value investing is a slow process.
It's boring.
It is boring, but look at a stock like Alibaba. I believe Alibaba could be a 6 to 10 bagger in the next 10 years. I think right now, I'm buying Alibaba because I think it's going to be worth $1,000 to $1,500 a share at some point in the next 10 years. Could I be wrong? Absolutely. But if I buy 20, 30, or 40 companies that look like Alibaba selling for the same metrics, I will do very well in my investing.
I think a lot of YouTubers, Mo, they clickbait you as a viewer
like we just did?
with these exploding stocks. Yeah, but Paul, the difference is they just keep looking at pre-revenue. They want you to look at pre-revenue companies that haven't done jack shit in this world, and then they tell you that it's so exciting, you got to get in on the ground floor now. What is an opposite approach with a company like Alibaba or Intel or something of that nature, Paul?
Yeah. So when you're looking at it from a value approach, your goal is to buy a company that's out of favor with the public. The voting machine in the short run is very bad. Oh, Intel's losing to AMD. Alibaba's got its issues because China's going to shut them down, blah, 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 blah. And say, is this realistic or not? Because usually there's a big disconnect. That's where you make your most money. When things are most fearful, that's where you make the most money, right?
Yep.
Okay, so for these companies, things are pretty fearful right now. When it comes to chart reading, it's about finding, and Mo will get into that shortly, it's about finding the right setup, go from there. Momentum trading, it's all about buy the trend. When you hit a trend, stick with it. One of the best momentum traders of all time, Jerry Parker, we were on a call with him the other day. He said he made a killing on Tesla. He doesn't care about the valuation or the fundamentals of Tesla.
Tesla, Moderna, all these crazy things.
All he cares about is what's the stock price doing.
Yep.
But it all depends on what basket you're in. Now, I will tell you, you're more likely to make a 10-bagger if you hold a stock for a very long time in a value play. Because on momentum trading, it's all about the second a number hits, it goes over a certain level, below level, you get out. So how are you going to find the big next breakout? You have to find the right process for you. We have 3 processes we use: value investing, chart reading, momentum trading. But remember, if your entire life is based on finding a stock that's going up 10 or 15 times, just stop. Find good stocks, selling at good valuations, buy a pocket of them, and write it out. Your best ever 10-bagger will be when you're 25, 30, 35, 40, 45, 50 dollar cost averaging into your SPY or VOO ETF. And when you wake up 30 or 40 years later, it's going to be 10 or 15, 20 times higher. That's your multi-bagger.
But see, so many folks, Paul, are seeing the huge gains on people on Tesla, on hype stocks. And actually, now that I say that, there are so many, in our community, folks, once you can join our community to get the software behind Paul, and we'll go into that. But Paul, they wanted to start a thread called Stock Mo Survivors, almost like they survived some terrible thing.
And they're going to be everything money. Because guys, it has to speak to you in the right way.
I guess
the best part is, though, we have processes for everything we do. You're not going to ever hear us go, well, it feels nice and warm. It feels like it's going to. No, we have a process. Like, what does the process say? Do this. Even in relationships, Seth, we talk about relationships. One of the biggest criticisms of my past relationship was I was too big into process. Give me my rules.
Yes.
What rules? I'm like, I don't want to. I'm like, no, I need rules. Because if I don't have rules, the joke I make is there's 10 tables in this room. You said to me, don't touch a table. Which table? I'm not going to tell you. I'm not touching any table.
I
don't know.
You like rules.
I like rules because it allows me to give me a confined space. Same with investing. I like having my rules. And these are the things that work for me. But that doesn't work for you. There's something else that will. You've got to find the right thing that works for you, and that's when you'll find the right breakouts in your investments.
If you have found yourself just buying random stocks that YouTubers told you in the past and then hoping they would break out, perhaps this process can speak to you, and you'll have to watch a lot more of our videos to do that. But Mo, are people trading? Show us the rules that you've set in place to make trading and using charts look so easy, because new people can do this. Even youngsters like my son can do this. Go ahead, Mo.
There's a way to catch breakouts, and it's very easy. If you do it from a 15-minute perspective, all you do is look for three things. So you're going to look at a 15-minute chart. You look at your stochastic, which is your trend, your volume, and your engulfing candlestick, which is your adding point. But from a long-term perspective, let's say you want to get something and hold it for multiple months at a time. This is why dog stocks are so important. They're stocks that come down, they have a downtrend, and then they just go sideways for a long time with their trend as the price just trickles down. Now, the reason that we throw tracker shares on a stock, which is buying one share of a stock, is because eventually this trend is going to turn up. And as soon as that gets into the sweet spot, that is when the stock typically goes. So if you want to find a trend and catch it and run it for a very long time, this is exactly what you look for. This is AT&T. AT&T is a great stock to trade. Now let's go over to Best Buy. You would be waiting for something like this to happen with AT&T. It pops right into the sweet spot, and you start to make that beautiful climb. That is how you catch trends. There is a way to do it. It's not going to looking at some kid in his bedroom from YouTube and saying, this stock is going to do this. Well, we don't know if it's going to do that. This has a proven history that it is going to do that.
And you're not going to catch the bottom, and you're not going to sell at the top.
Exactly right. There is a reason that you are going to start. You missed this. This is what you missed. This is where you start adding. So my whole thing is always buy high, sell higher. It's hard for people to grasp that concept, but you are going off of probability. And the higher you buy, because it's in a range and you have your certain trend that you're catching, that is going to give you the highest probability of making money over the long period of time.
If following these rules, the fundamentals behind companies, speaks to you, you can join our community. Paul, tell them what they'll get if they go to Everything Money and join.
The reason we created the software was exactly for this, because people watch the videos, want to do their own analysis when they see me do this. So we created the software so people could do this. You get everything you see here on the Everything Money channel, on the Everything Money page, all our tools, plus all the ones coming up. You get over 30 years of financial data. You get access to Seth Moe and I. You get all the 8-pillar analysis, that stock analyzer tool, real estate calculator, retirement calculator, 8-pillar portfolio. We can put in 50 stocks at once. It tells you how they all look as a portfolio. All of this plus exclusive daily content. We have 1, 2, 3 videos a day that we release only to our users of our software. You get it all in mobile form. All of this is available on your mobile app, all for only 90 cents per day. 90 cents per day. If you can increase your returns or decrease your losses by 1 or 2% a year, that could lead to hundreds of thousands, even millions of dollars in extra net worth for only 90 cents a day. 2 ways to sign up, everythingmoney.com or Patreon. The benefit of everythingmoney.com directly is you don't pay sales tax yet because we're not big enough. So sign up, only 90 cents a day. This is a no-brainer, less than a cup of coffee.
Paul and Mo manage about $100 million in real estate, stocks, and multiple businesses. Paul, did you get there Mo, did you get there trying to chase after a sexy new IPO'd companies chasing down?
What started because I was born in the right family. And then it grew from there because I did the right things. And I didn't go sit there and say, oh, let me just go throw this thing to the caution of the wind and go for it. No, I sat there and said, listen, I don't need to make 20% a year. I just need to buy good companies at good prices, and it'll balloon, it'll snowball, it'll be awesome.
Never once in my life have I bought an IPO.
Really?
Right when it first came.
I was offered Google IPO. That's the only IPO I ever was offered that I regret. I've been offered lots of IPOs. The only one I ever regret not taking was Google.
Yep, never once in my life have I done it, and I've made a lot of money.
Yeah.
That is our take. Watch more videos. Join our community. I'm sure you'll like it. And we will see you on the next video. Fondle the thumbs up on the way out. And that's our take. Thanks for joining us. See you guys. Appreciate it.